In this briefing, we will provide a procedural overview for managing suppliers and accounts payable within the Xero accounting platform. We will follow a specific case study to demonstrate the practical application of these functions. Our agenda is structured into 6 sections. We begin with the initial setup of suppliers and their credit terms, move through the various methods of recording purchases, and conclude with payment reconciliation and financial reporting. Let's start with the foundational step, establishing and recording the credit terms agreed upon with your suppliers. This is a critical element as it directly impacts your cash flow management by defining payment due dates. According to the source material, our case study business, Walk and Roll, negotiates credit terms on a supplier-by-supplier basis. This means there is no standardized approach. Instead, for every new supplier added to Xero, their specific credit terms are recorded directly within that supplier's contact card. Now we will examine the broader framework for managing supplier purchases within Xero. This is the complete process the system uses to track all procurement activities from order to payment. The source documentation outlines 2 primary methods for recording purchases. Method 1 begins with the creation of a formal purchase order, which is ideal for tracking ordered goods. Method 2 involves entering a supplier's bill directly into the system upon receipt, a more direct approach often used for services. A complete purchase cycle, regardless of the initial method, consists of 4 distinct stages. It starts with recording purchase orders, followed by recording the purchase transactions themselves. The 3rd stage is making payments to settle the accounts payable, and the final stage is managing any purchase returns. We will now analyze the first workflow in detail, which starts with raising a purchase order. We'll use a transaction from our case study to illustrate this process from creation to conversion. In this example, Walk and Roll orders supplies from a new supplier, Walk's Cooking PTLED. This requires creating a new supplier contact in Xero and then raising a purchase order dated the 7th of August for a total value of $975. An analysis of this purchase order reveals 3 key points. First, all items listed are GST-free. Second, as this is a new supplier, a new contact card must be created in the system. And third, no payment is made at this stage. This document simply formalizes the order. As the source material explains, the next step occurs when the goods are delivered and the supplier's tax invoice is received. At this point, the approved purchase order is updated in the system by marking it as billed. Following the purchase order, Walk and Roll receives both the supplies and the corresponding tax invoice from the supplier. As you can see, the details on this invoice exactly match the original purchase order we just reviewed. The analysis confirms consistency between the tax invoice and the purchase order. The previously established credit terms now apply, so no immediate payment is required. The purchase order's status is changed to billed, which officially converts it into an account payable on the balance sheet. That covers the purchase order workflow. Now, let's examine the second method, recording a purchase directly from a supplier's invoice without a preceding purchase order. The principle for this workflow is straightforward, as stated directly in the source material. You can bypass the purchase order step and record the transaction directly from the supplier's bill. Our second case involves a tax invoice received by Walk and Roll for monthly garden maintenance. The supplier is new, and the total amount of $275 is being entered directly into Xero as a bill. The process here is similar in outcome to the first workflow. A new supplier card must be created. Credit terms apply, meaning no immediate payment is made. The invoice is recorded as a bill, creating an account payable that will remain open until its due date. We now proceed to the final transactional stage of the purchase cycle, recording the payments made against the outstanding bills we have just created in the system. The first payment example from the source is evidenced by this check stub. It records a payment of $1,100 to Bumble and Scrooge Property, settling an invoice that was previously entered for rent. The second payment example shows a check for $975 to Walk's Cooking. This payment settles the invoice that originated from the very first purchase order we examined at the start of this briefing, thus completing that transaction cycle. With transactions entered and payments recorded, the final component is monitoring. Let's review the reporting tools within Xero that provide oversight of your accounts payable obligations. The primary tool for this purpose is the Aged Payables report, highlighted here on the dashboard. This report provides a summary of all amounts owed to suppliers, categorized by the length of time each bill has been outstanding. It is essential for managing your short-term liabilities. This concludes our procedural walkthrough. The key consideration this process raises is a question for your own operations. Is your accounts payable process providing a clear and accurate view of your business's short-term liabilities? Effective cash flow management depends on the answer.